Reserve Bank of India has come down heavily on HDFC Bank. They have stopped them from issuing new credit cards and acquiring new business which requires digital application. Let's find out what's happening. Welcome back to Be Rich. HDFC Bank is India's most valuable bank. Not only is it India's most valuable bank, it is also the most valuable bank in the world by market capitalization. It has consistently managed to grow its profits by 20% while keeping its NPA in check. Even this COVID pandemic does not seem to have affected it much. But in recent times, there was a management change. Aditya Puri went and Sashi Jagadishan took over. As if to coincide with this, in a bad omen, the HDFC Bank has been having several crippling outages of its digital payment services. The NPCI payment link from HDFC Bank is not working, and people attempting to transfer money, it is have been continuously disappointed, and the transactions have failed. Finally, on 21st November, there was a major power outage, and the HDFC Bank system crashed for several hours, and people were not willing to be able to do digital transactions. The Reserve Bank of India, after examining all the issues, has passed an order yesterday temporarily stopping HDFC Bank from issuing new credit cards. It also has said they should not add more businesses which will require more digital strength. In response, HDFC Bank has said it has been fortifying its IT presence over several years, and there has been a small gap, and gap will be closed out soon. The Reserve Bank has asked HDFC Bank's board to study the system, fix accountability, and take action. HDFC's bank shares have dropped 1% in the market but still remain highly overvalued. This is not the first piece of bad news during Aditya Puri's departure. There was a problem in which the head of finance of retail sales of auto loans was found to be selling some equipment which was GPS equipment which had to be fixed in the car. The head's All India head's daughter was the agent and dealer for the GPS company, and all salesmen of HDFC Bank were told that they have to bundle this product with the car loan. But the employee concerned had retired by then, and HDFC Bank seems to have hushed up the matters. But this outrageous is a public menace and has happened several times. So the RBI was forced to crack onto it. This clearly shows that there's a lot of work to be done giving banking services to the unbanked. This means new private sector banks, which have just come, like IDFC First, will be in a position to grow faster because HDFC Bank is not able to manage the load the customers are putting on it. Similarly, ICICI Bank is fast turning out into another public sector bank. I was there recently, and it just showed in the branch to get us my account to just transferred from one branch to another branch, and reverse an entry took me 1 week and lot of time. It reminded me of the old public sector banks. I guess banks like HDFC Bank and ICICI Bank have reached their full potential, and it's the new private sector banks that will grow very fast. IndusInd Bank, which is as old as HDFC Bank and ICICI Bank, fell into bad times and started to grow, had some hiccups in recent times. But with an infusion of 4,000 crores, IndusInd Bank seems to be back on track and is continuing to grow. Let us watch what happens. So, here I am not talking about the safety of HDFC Bank. HDFC Bank has a huge CAR that is above in excess of 18%. That is 20% of the bank's loans have to go bad for the bank to collapse. That is not going to happen. HDFC Bank is also increasing its loan book by 18 to 20% every year. and therefore its profits, net profits, are also growing at 20% a year. But there seems to be a hit or roadblock in terms of infrastructure, and HDFC Bank has not invested in enough infrastructure to serve more and more customers. If a lot of customers try to send money at the same time or transfer money at the same time, the system seems to have collapsed repeatedly. HDFC Bank was not found napping and did not prepare for its growth. Therefore, other customers, the new customers, will look at other alternate banks, and the same problems are there with ICICI Bank also. So, the new banks which are trying to grow will be hungry and try to grow faster. This is why India needs more banks. It has very limited number of banks. Even Rajan gave only license to two banks, that is IDFC First, which is a merger of First Capital and IDFC. He gave license to Bandhan Bank, but India would require another 10 or 15 banks and at least 5 banks at the scale of HDFC Bank and ICICI Bank to grow faster. The old public sector banks are not in any position to compete because they expect that the customer will come to them and beg for loans and beg for deposits. A bank, a public sector bank, at best can offer 5 to 5.5% in interest and deduct 10% in tax, whereas a new private sector bank will pay between 6 to 7% for your savings account balance, and the service is that the person will come to your house and open the account, and you need not visit the branch at all. And HDFC Bank is going to face more competition with DBS following Lakshmi Vilas Bank. DBS was one of the first banks to open a digital account. That is, you could open an account from a cafe day account without going to the bank at all. Just by giving your authentication in a cafe day vending machine, you could straight away open a digital account and never bother about the branch. With the scale of Lakshmi Vilas's 566 accounts, this will mean DBS, with its agility and superior regulation and systems, will start to compete big time with the old bank, with banks like ICICI and HDFC. Unless ICICI Bank and HDFC turn to grow faster, turn nimble, and adopt technologies faster, the growth which they had over the last 20 years will elude them in the next decade. Thank you for watching. Be Rich. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification. If you use Kindle, you can buy the book using the Kindle link given below. If you want a hard copy, send a message to the WhatsApp number given below and my team would get in touch with you. At the very end, if you want to get in touch with me, please send a mail to berichenglish@gmail.com. I am grateful for your support of Be Rich.